So what is TILA? TILA stands for the Truth in Lending Act. It is one of the older laws when it comes to mortgage lending. And TILA basically centers around all of the disclosures that we have to provide you as a mortgage lender or a mortgage broker. Um, it set a standard in really actually any, not just mortgage, but any transactions related to credit that requires lenders or brokers or credit providers, for lack of a better word, to disclose certain things to you anytime that you apply for a loan. We have to disclose the APR, the loan term, the monthly payment, the amount of finance charges that you're paying. So anybody who's ever looked at a mortgage disclosure that sees, you know, an itemized fee um, breakdown where this is how much you're paying for an underwriting fee, this is how much the credit report is, this is how much, title fees, where you have this whole itemized breakdown. Well, TILA is the law that requires mortgage lenders to do that basically. Because of TILA, we have to send out these breakdowns to be basically transparent with what you're being charged. There's certain regulations about what can be a profit center for certain people. Like certain fees are not allowed to be inflated. Like a credit report fee, for example, it's actually illegal for a mortgage broker or mortgage lender to charge more for a credit report fee than what was actually paid. Same thing for an appraisal. So you can't mark that up. It's codified into law, that if your credit report is $75, the most you can charge a customer is $75. Um, there also was, a more recent development made to TILA called TILA RESPA Integrated Disclosure, which anybody who had, bought or sold a house prior to 2015 would have seen. They'd be familiar with the term good faith estimate or HUD-1, which were the old forms that we used to use. The good faith estimate was what was sent out um, in good faith at the beginning to estimate fees at the beginning of the process. And then the HUD-1 was the final disclosure. We also had to send something called a TIL, a Truth in Lending Disclosure. 2015, they created this law called TRID, which got rid of all of those forms for mortgage lending, TILA, RESPA integrated disclosure, and combined the Truth in Lending and the HUD-1 form into one called a closing disclosure, and changed the good faith estimate into something called an LE, loan estimate, which is supposed to, they added some necessary fields. It's supposed to be a little bit more easy to understand and a little bit more transparent. I have some gripes with some of the information that's displayed on it. It can be a little bit misleading the way that the CFPB had us, basically required that we send out disclosures. Like we have to disclose basically a total interest percentage, which is basically just an arbitrary figure where they look at the total amount of interest that's collected over the loan expressed as a percentage of the initial loan amount, which doesn't really do anything for anybody to know that, like, oh, you're paying 92% of your initial principal balance in interest over a 30-year life of the loan. Like, that's just sort of an arbitrary figure. So the way that it was designed, I have like a few gripes with, but obviously I'm not the one who makes the rules. I just follow them. Um, but by and large, more informative, easier to read. It's been kind of the benchmark standard for 10 years. So yeah, if you hear anybody talk about a TIL or truth in lending, that's what they're talking about. It is the reason that we have to give all of the information that we do, and it helps to protect consumers from predatory lenders who might, try to hide fees or be, a little bit shifty about where the cost would be. It basically requires everybody to be transparent about what they're charging and what it's for.